India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. And as you can see, we are back in our normal studios. And I think and I hope and I reckon that perhaps we are going to be in a bit of a normal kind of a market as well. Because the last 3 days have anything been but normal. Monday, a 3% rally. Tuesday, a 6% fall. And yesterday, a 3% bounce back once again. So, on to more normal kind of markets. I'm Prashant. With me, my colleagues Nigel and Surabhi. Guys, hi, good morning.
Hi, morning Prashant. Morning Nigel. I hadn't been on a roller coaster in a while. It's been many years, right, since I went to the amusement park. I think this week pretty much did it for me.
Well, what about overnight cues? Nvidia going from strength to strength.
Amazing.
$3 trillion of market capitalization. Wow.
Trillion with a T. Huh?
3 trillion.
Trillion.
Yeah.
I mean, you're going to say it again and again.
Absolutely, absolutely.
That's 60% of our market capitalization.
It's just like amazing, right? And we'll talk more about this because it's a phenomenon. It used to be Tesla in 2021, and that was kind of the leader for the entire pack there. Now it's, of course, Nvidia and what's happening. But let's begin with, where we should, which is, of course, where we left off yesterday and run you through a few things. So a big bounce, as I said, 3% rally, 6% fall, 3% rally, which means Friday to, yesterday's close, you're essentially, the returns are zero. On the Nifty, if you bought Nifty spot contract, which you can't, but if you bought it and then you kind of sort of looked at it yesterday, at close at 330, nothing. But with yesterday's bounce, it means that the Nifty has now recovered about 50% of Tuesday's losses. Now, I don't usually look at the flows so closely on a day-to-day basis, but because we've had such large days and such large numbers as well, here is a quick look. 5,600 is what FII sold yesterday, and locals were the ones which did the buying, 4,500 crores in cash. So it almost netted each other out, but the point is FIIs are still not back. They were back for that one day on Monday, but then after that, not really. DIIs thankfully are back because DIIs sold about 3,000 crores on Tuesday after that election verdict, were they back on the buying side. On the index futures, positioning is still short. A little bit of covering, but from 3.55 lakh contracts, now we're down to about 3.1 lakh contracts. So it's still a large net short position as far as index futures are concerned. Yesterday, of course, we got clarity that it is, of course, going to be Prime Minister Modi for a third term. It's going to be the NDA. And that those sound bites sort of kept, I think, giving one leg after another up for the market, which is, of course, started with Chandrababu Naidu saying that statement which came at about 11 in the morning saying, I'm firmly with the NDA. And, of course, then later there was the NDA meeting itself, everybody rallying behind Mr. Modi for being the Prime Minister for the third term. And there was, of course, that photo opportunity as well, right? With Mr. Naidu, Mr. Nitish Kumar, and, of course, the rest of the senior leadership as far as the NDA is concerned. So I think in that context, there is more a sense of, more settled kind of feeling that the shock is out of the way. It's going to be perhaps a stable government, and that is essentially what the market would like to see. But now, from here on, there is a few other things, right? So the swearing in is on the 8th, which is a Saturday. And markets will closely track the, what ministries are likely to go to allies like the TDP and the JDU. More than the TDP, the JDU, right? Mr. Naidu, of course, has been business-facing, is liked by corporate India. Mr. Nitish Kumar, we'll have to see. Is it possible that the railways is a ministry which the JDU gets or something else? It has implications for specific sectors, etc. So we'll talk more about that as we get to know this. And I think this is going to be top of the mind once again. Now, overnight, we've seen a big move, and it's a very positive move. NASDAQ is up. NASDAQ futures have crossed, the NASDAQ 100 futures have crossed the 19,000 mark. And the equity close also, NASDAQ was up 2%, the S&P was up about 1.18%. Yields continue to fall 5 basis points again, which means that the 10-year benchmark in the US, the yields have fallen 25 basis points in the last 3 sessions. That is very large. Markets have ignored it. I mean, things like IT services here, even metals. Metals had a big rally, but the fact is dollar is weakened to 104.5. Yields are falling in this way, which essentially, and by the way, all of this in the US is happening because growth is coming in. Labor market growth is coming in weaker. We had one data point on Tuesday, and last night, once again, we had the ADP data, the private payrolls, and then you also had the ISM services, the labor component, which weakened. So, this is, of course, got implications for interest rates and specific sectors here. IT, metals come to my mind, top of the list there. Now, as far as levels, etc. are concerned, we are very close, and we're going to put out very near-term levels because we've had a big move, and it's very unlikely on a day-to-day basis you have these 3% rallies, right? We kind of course-corrected a little bit, and now we're in a more neutralish kind of zone. So the Nifty now needs to decisively close about 22,640. We're there. It's 20 points away. But that's the level I would watch on a decisive kind of basis for further up move. Supports come in at about 22,400. That's the 40-hourly average. And on the Nifty Bank, similarly, on the upside, on the upside, the level basically is a retracement of the fall, the two-day fall. 49,414. Again, very close by. We left off at about 49,050. And support comes in at the hourly average, which is about 48,390. More normal markets, I think that is what we would like to see. The GIFT Nifty will come up on your screen to indicate a start. A 90-point higher start. We'll see if we get that and if we actually sustain that. Guys.
Yeah, Prashant, not much more to add. I'll just fill in some of the data points that you referred to, which is why Wall Street was obviously higher. NVIDIA, of course, was the big story that powered the NASDAQ up to fresh highs. The S&P 500 was also sort of taking on fresh high levels. And NVIDIA did become the second company only after Microsoft in terms of market capitalization in the US with that big $3 trillion market cap move. Now, in terms of the data points, just to tell you the numbers, because this is something the market's tracking, this ADP report, the miss was quite a bit. The numbers came in at 152,000. This is the May private payrolls that were reported yesterday. The estimate was 175,000. It's a big miss over there. And the dollar instead decided to react to a more positive cue, which was on the services data. So the ISM non-manufacturing PMI shot up to 53.8. It's a pretty high level, and I think it was the highest since last August. So almost 8-9 month high on that number as well. So the dollar was reacting to that, but the bond market was quite happy with the slightly weakish numbers coming in from the labor market. Remember, all eyes, obviously, the big one is the non-farm payrolls report, which comes out on Friday. And then it's all about, looking out to the Fed, which is not expected to cut, but still, the hope and expectation is that maybe they will at least deliver that one rate cut, or maybe two in best case scenario this year itself. Speaking of rate cuts, the ECB may be first off the ground, and all eyes on the European Central Bank today. They are meeting, and the expectation is that they'll start off the rate cut sort of cycle, and it will be the first cut since 2019 if the ECB delivers. So that's something that global bond markets are also watching out for. As Prashant mentioned, we've got, of course, lots of selling in the cash market. So if you were looking forward to some sense of confidence that FIs are buying the dip, not in cash, that wasn't the case. After a sell of almost 6,400 crores on, result day, yesterday there was another massive sell number of 5,600 odd crores. Of course, a lot of it was offset by DIs. DIs, remember, sold on the 4th of June, but they were again buyers yesterday. There is some short covering in the F&O market, but the cash buying is absolutely not visible by the FPI community. The index has closed above at least, in the rebound yesterday, so 20 DMA, 50 DMA. It's taken that out. But for me, the main question is what happens from here on? Now that the rebound is over and done and we're back on even ground, does the market get into a consolidation patch? Or do people start taking early positioning, pre-budget positioning once the swearing-in happens and, trying to second-guess every single statement that's being made on the tilt or the shift in terms of policy, if at all? The FMCG index, by the way, just saying after all the rally, and we were speaking about this big, double-digit moves yesterday, it's still flat. 1 year on, the FMCG index is at the index level is absolutely flat. So we'll have to see if that buying continues. But also, Nigel, I guess even if the FMCG buying continues, for the index to move higher, we'll need more. We'll need banks. We'll need some of the big boys to participate as well.
Well, that's right. That's spot on, right? Because the weightage on the index itself is quite muted. And I'll be interested to see whether or not the ECB follows the Bank of Canada. Yesterday, they went ahead and they cut rates by close to 25 basis points out. So we'll keep an eye out on that global cue. But let's run you through the top cues that I'm looking at. Well, in terms of the FI action, yesterday they sold in the cash market, but they covered some mild futures in the F&O basket as well. And we did have a good trading session yesterday. Part of it could be that the Nifty Bank played out its weekly expiry. Today, all eyes will be on the Nifty because that has the weekly options expiry that plays out. And before we get to the flows, just one more factor that I wanted to highlight is in the last few sessions, last 2-3 sessions on, you've seen that some of these promoter entities are coming in there and they're chipping in yet again. I don't want to highlight any companies as of now, but I went through a list and some of them, whether it's 5 crores, 10 crores, whether it's 0.2, 0.3% odd, that's actually taken place even in the last 2 sessions odd. So I'll keep an eye out on this promoter activity besides the institutional flows. But talking about the institutional flows, well, yesterday if I net out the DI and the FI number together, it was at around 1,100 crores odd. Remember, when it goes to the 1,500, 2,000 crores odd, then you see the markets coming under selling pressure. So till around 1,000 crores, put in there some retail money, you're able to hold this market higher. So that's one number I'm looking at. What do the FIs do? As I said earlier, they added long positions, close to 20,000 contracts. They covered close to around 20,000 contracts as well. So the swing factor out there is close to 40,000 contracts. The net short positions are at around 83%. And in absolute terms, from around 3.55 lakh contracts, the swing factor is around 40,000 contracts. So that's why the net short at around 3.11 lakh contracts. But as I've been highlighting for the last few days, it's not just the FI data. We're looking at the clients. That's a large HNI as well as retail out there. And in yesterday's trading session, well, they took some money off the table. So they're still very much net long, 2.5 lakh contracts on the long side, combating the FI net short positions. But yesterday, that long positioning came down a little bit in trade. Getting to the levels then, well, the Nifty, yesterday's close is very encouraging. We ended at around this 22,620. And why is it encouraging? Because we had a high, and then we came off close to around 2,100 points approximately. With this pullback that we saw yesterday, we've retraced close to around 66% of the fall that we saw in that, in those 2 sessions. So that's a good close that we saw. You'll want to build on from here on. The other levels that we're looking at, the 20 and the 50 DMA for reference, both on the Nifty as well as the Nifty Bank. So that's important. On the downside, you don't want the 22,400 odd mark to break. The GIFT Nifty is suggesting we open up with close to around 90 points odd. If this market's not for the faint-hearted, so some kind of taking some money off the table in the near term. This market is headed for much higher levels, in the months to come, in the years to come. But just, if you're making some money, you bought the dip and you're getting a 100-point pop, maybe taking some money off the table may not be such a bad thing.
Okay, all right. Nigel, thanks for all those cues. Let's get started then with the equity call of the morning. We've got Rhythm Desai of Morgan Stanley with this note. He's expecting macro stability to continue to inform policy, and he sees structural reforms driving a 20% earnings CAGR and annual compounding of the sensex at 12 to 15% over the next 5 years. He says the BJP-led NDA is set to form a majority government for a third term, and they forecast GDP growth of 6.8% in the current fiscal, with headline CPI decelerating to 4.5% on average. He says their earnings growth forecast throughout FY26 remains 500 basis points higher than consensus, and the 12-month forward BSE Sensex target is 82,000, implying a 14% upside from current levels.
Okay, well, there's Rhythm Desai. Let's get Lawrence Belanco of CLSA in as well. He says that focusing on the daily chart of the Nifty, he sees initial support provided by the lower boundary of the March to May trading range at the 21,700 to 21,735 area, followed by the 200-day moving average, and then the September 2023 high, which comes in at the 20,223 area. He says September 2023 high and the 200-day moving average should provide support where the Nifty can stabilize and start a recovery and some consolidation pattern from there.
Okay, let's get you some money market views as well now. Parul Mittal Sinha of Standard Chartered Bank says the USD INR pair traded in a relatively narrow range of 83.10 to 83.65 in the past week, as intervention by local banks helped smoothen the volatility. She says FPI flows would be key in the near term as the market closely watches for the likely policies of the new government. However, she's expecting the pair to trade in a narrow range in the near term as well, driven by intervention by local banks on either side, expecting the USD INR to be in a band of 83.20 to 83.60 for now.
On bonds, we've got Parul coming in and saying that bond yields moved sharply higher on Tuesday after the unexpected election results raised worries of fiscal deviation and the consolidation path. Yields are slowly drifting lower to pre-election levels on formation of a likely stable coalition government led by the BJP. She continues to expect policy stability. She adds MPC outcome is a key event in the near term where the MPC is likely to keep repo rate stance unchanged. 10-year, according to her, should be in a range of between 6.95 to 7.05%.
Okay, we have a lot of stock-specific action to track for you. We get to that in greater detail in just a bit. But for the time being, I'll run you through our top 10 list that we're looking at. CG Power, BHAL, IEX, Century Textiles, Torrent Pharma, all of them will be reacting to positive news flow. Add to the list Uno Minda, RVNL, HAL, and KPI Green. The lone stock that will be reacting to negative news flow is Trident for today's session.
Okay, well, we were talking about how NVIDIA is now almost $3 trillion, right, in market capitalization. So here is, the foremost valuation guru, Aswath Damodaran, sort of commenting on NVIDIA and the valuations. Listen in.
No, I don't want to sound like a broken record, but on an intrinsic value basis, it's really tough to get to $3 trillion. That said, though, if you're designing the perfect momentum company from scratch, it'd be it. Yeah, you've got a great story, a CEO who sticks to the story, no distractions, is able to meet expectations in the short term because they've set the game up. And you've got a market that contributes to the mix. I mean, I think that you're seeing one of the great momentum plays of all time playing out in front of you. And I think my basic story is bigger than it was a year ago, partly because of what NVIDIA has delivered, and partly because of what AI is showing it can do in the overall economy and market.
Okay, well, if you were to design a perfect momentum company, momentum stock from scratch, it would be NVIDIA. That's a nice way to put it. That's Aswath Damodaran. Let's get in some perspective on the market here. Mark Matthews of Bank Julius Baer and Company is with us. Mark, good morning. Good to have you with us here. Thank you very much. Prashant this side. So the election is done and dusted. Results are out. A bit of a shock. Recovery yesterday. Where does it leave us? Foreigners are still on the sidelines, still selling aggressively, Mark. But they were selling even before the election results. So I'm not sure how much of this result has contributed to their views and if they changed or not. But let's just start there. Mark, your thoughts?
My thoughts on the election is it doesn't change my opinion of India one single bit. This is an economy that's growing at around 7% and will continue to do so for the next few years. And that's going to translate into kind of mid-teens earnings growth. And there are very few countries in the world like that. So doesn't faze me one bit. As for the foreign selling, I can't comment on it. I don't understand it. Doesn't make sense in my opinion. This is an economy which in 3 years' time will be the third largest economy in the world, too big to ignore. And with bond investors beginning to allocate to India when India is included in JP Morgan's emerging market bond index on the 28th of this month. And I believe that the Bloomberg Barclays index and the FTSE index will follow. Bond investors will be allocating, and one way or another, the equity investors will have to participate in this market.
Mark, hi, good morning. So, I mean, any sense on what the thinking is and what is the chatter that you're hearing around the election? One would have imagined that perhaps foreign investors see this as a bit of a buying opportunity because the market did sell off, though we've recovered half of those losses. But what's the sense on the new era of coalition politics that is upon us?
My sense is, in speaking with other people, that they actually don't mind this result, and it might somehow tone down the rhetoric a little bit. I don't know how else to put it. That's the message that's been conveyed to me by foreign investors who also look at India. I must confess that the small population of people who I speak with are largely on the same page as me when it comes to India. I mean, I tend to speak with people who think the same way I do, and they liked it all along like I do. So the people who've been selling, I don't really know why they've been selling. I actually don't know those people. I guess it's valuations. That seems to be the thing they fall back on.
All right. Hi, good morning, Mark, and good to hear your optimism on the Indian markets, even post those elections. I like the way you put it. It doesn't change your opinion one bit. So how do you approach these Indian markets then? I recall when we last chatted earlier in May, you'd suggest that maybe if the BJP comes back to power, then the mid and the small cap space as well could throw up quite a few opportunities. How do you position yourself in the Indian markets right now? Post this election verdict, is the preference for the larger cap names? Will you look at some of the mid cap names as well?
Yes, in fact, the mid-cap space is a place that globally we are paying a lot more attention to now because it tends to be a more cyclical space in most markets. And we like what we call quality mid-caps. Quality means things like low leverage, stable free cash flows, high intellectual product, a lot of intellectual product or brand names, good quality management, all the standard stuff. India has a big mid-cap universe, and so, with the few hundred names that you have in that space, there you can easily construct a dozen or so that fit the criteria I just mentioned. But I'm more sector agnostic on India. I've always just felt that, not always, but the last few years, that as the country has entered into a new capex cycle, which probably should last another 6 to 8 years, the whole thing will just do well. So I don't spend that much time worrying about what parts of it.
I mean, the important thing is to stay invested. So I think if I can draw that conclusion, Mark, great to have you with us here. Thank you very much for your time. Appreciate it, as always, here on CNBC TV 18. Well, that's a quick view from Mark Matthews. Of course, he's liked the market here for some time. He continues to hold that view very, very firmly. We'll take a quick commercial break here. We'll come back, and it's time for the list of stocks that we'll be watching out for with our research team. Stay tuned.
Welcome back. Well, it is time now, as the market volatility is expected to ebb. Time to get back down to stocks and taking a look at some specifics here as well. We've got our team with the latest. Let's start with Sonal on CG Power. She's been following a lot of the management commentary. Sonal, what did you pick up?
Well, we spoke exclusively yesterday to the chairman of Cholamandalam Investment, Velayan Subaya, and there were a couple of takeaways specifically for CG Power. So let's talk about that first up, because they are seeing private capex cycle picking up and they think that's positive. E-mobility is a bet that they are very confident on, and this is somewhere they'll put a lot of capex as well. They say India is going to shift to electric at a higher pace, and they will launch electric three-wheelers, electric trucks and electric tractors as well. So they have deployed around 3,000 crore rupees in terms of an EV capex itself. The semiconductor industry, this is something that they've spoken about extensively as well, that they think will mushroom in India. There's a lot of potential according to them, and they've just started the design and building of factory in Gujarat, something that they won the order for recently. They'll start the operations in the factory in 2026, and the rate of turnaround at CG Power was surprising. They think there's a lot of growth aspects that are pending in CG Power, so quite bullish on the future prospects of the company.
Okay, all right, Sonal, thanks a lot for that. Well, let's go across to Vivek, who's joining in to tell us about BHEL as well as IEX. Morning, Vivek.
Well, good morning. The order cheer continues as far as BHEL is concerned. Most thermal power plants are coming across the country. This time, the company has received 2 orders from 2 separate subsidiaries of Adani Power. So the first order is in the state of Uttar Pradesh. The company will be supplying equipment that includes boiler, turbine, generator, and associated ancillaries. The total order size is over 3,500 crores. This is excluding GST. Similarly, in the state of Chhattisgarh as well, the company has received an order very similar. The company would be supplying equipment as well as the associated EPC works. The order size here too is over 3,500 crore. Remember, both of these power plants are close to 1,600 megawatts. That is 2 into 800 megawatts each. Now, the next stock on the radar will be IEX. Very strong volume activity as far as the month of May is concerned. Total monthly volumes of over 10,600 million units, up 29% on a year-on-year basis. Electricity volumes are up 21% on a year-on-year basis. The day-ahead market clearing price has come in at 5.3 rupees a unit, which the company states is almost 20% discount to bilateral short-term contracts. So they believe that there is more incentive as far as power producers to power buyers are concerned to buy from the short-term power market. The company says increased sell-side liquidity is being seen on the back of the government rule of sale of surplus unrequisite power on the short-term power market, increased fuel supply, as well as higher availability of generating units, going with the green on both of these names.
All right. Thanks very much for that, Vivek. Well, let's go back to Sonal, who's now got details on Century Textiles. Interesting news flow there. Torrent Pharma and Uno Minda. Sonal, morning.
Good morning, Prashant. Let me start with Century Textiles because their arm Birla Estates has entered into a joint venture. An interesting one here, they'll be building a residential housing development in Gurugram. This is one area where a lot of these real estate players are focusing right now, and the potential in terms of revenues is up to 5,000 crore rupees. Moving on now, Torrent Pharma has entered into a non-exclusive patent licensing agreement with Takeda Pharmaceuticals to commercialize its novel gastrointestinal drug in India. But do remember, it's a non-exclusive agreement that the company has entered into, but it's a mild positive there. Uno Minda, they have partnered with an automotive company to strengthen their electric four-wheeler product portfolio in India. Under this partnership, the company will manufacture and sell high-voltage category EV products, both for passenger vehicles and commercial vehicles in India, and we'll have a conversation with the management on that as well.
Okay, all right, got that. Sonal, thanks very much for those names. Upasana is watching out for a bunch of stocks, including some of the PSU names like RVNL and HAL. What's the news here, Upasana?
Good morning. Let me first start up with RVNL. The company gets LOA for a project worth 391 crores from Eastern Railway. Next up is HAL. ISRO chairman inaugurates HAL facilities to support LVM3 programs. Mind you, currently the existing capacity allows only 2 LVM3 launches per year. But this facility will support the production of 6 LVM3 rockets per year. Next up is KPI Green Energy. The company's wholly owned subsidiary gets order of 26.15 megawatt solar power project under captive power producer segment. And lastly, Trident will also remain in focus as the operations are disrupted at company's Daula facility due to massive fire accident.
Okay, thanks a lot for that, Upasana. Well, let's do a quick recap then of all the stocks that we are covering. Stocks with positive news flow. Most of them are positive today. We have CG Power, BHAL, IEX, Century Textiles, Torrent Pharma, Uno Minda, RVNL, HAL, and KPI Green Energy. While the lone stock that's expected to react to negative news flow is Trident. Okay, well, Sudarshan's woken up early this morning, gone through a lot of brokerage notes, and he joins us to give us a few of them. Hey, Sudarshan, morning.
Morning, Nigel. So in the brokerage corner today, we have first UBS on HDFC Bank. It has a buy call with a target of rupees 1900 per share. It says there is a likelihood of MSCI weight increase, but it's not given. And the weight increase that UBS is talking about, it's because of the selling by FIs in the recent months. And because of this, it can see passive inflows of $3 to 6.5 billion in case there is a weight increase. And it expects improvement in NIM and ROA over next 2 years. Next is CLSA on CapEx. CLSA says channel checks suggest government's 100-day plan will hit the ground running and large orders may be identified to be placed across infra and defense domains, and large order placement should reassure investors, and demands for more capex for Andhra Pradesh and Bihar should revive state capex as well. Amongst key beneficiaries as per CLSA are L&T, IRB, HAL, NCC and J. Kumar Infra. Lastly, Jefferies on housing finance companies. It believes government may announce revamped affordable housing scheme in budget, and affordable housing finance companies like Home First and Awas should be direct beneficiaries, and LIC Housing and Canfin Homes that saw growth slowing in FY24 can benefit too. It prefers Awas Finance, Home First, Canfin Homes amongst housing finance companies.
All right. Thanks very much for that. So those are brokerages and what they're saying. So lots to track there as well. Well, commodities are in focus next. Manisha is here to tell us what's top of mind. Manisha, good morning.
Morning, and thank you for that, Prashant. Well, last week was all about profit, and until yesterday, that was the theme. But overnight, we've seen some gain come back in commodities. It is opportunity buying on the lower side. And then, of course, the Bank of Canada has cut interest rates by 25 basis points. European Central Bank monetary policy meeting is today, and a 25 basis point of a rate cut has been factored in as well. And then the street also is looking at a better, stronger ISM numbers that have come in from US. So that reaction is seen in prices. Markets also have seen a decline in bond yields on the back of weak US private payroll data data. That has given support to gold, which gained up by a percentage point. Silver is back above $30 an ounce. Copper prices gained up by 1.5% overnight, and the Brent crude prices, which have been declining for 5 days now and have seen 7% of a decline in the previous week, also saw some gain come back, and we are trading above $78 a barrel into the markets. It is all going to be about the U.S. non-farm payroll data that comes in tomorrow. Ahead of that, there is choppiness into the markets, but we definitely have seen buying on the lower sides.
Okay, all right. Got that, Manisha. Thank you very much. So those are the cues for the commodity markets today. We do have to take a very quick break. We'll come back on the other side and we'll get a couple of fundamental thoughts going with Deepan Mehta. He'll be with us in just a bit.
Welcome back. Hope you're having a good morning. Well, we're expected to start off with a gap of closer on 90 points odd. So that's seeing a good follow through from yesterday's 700-point rally. Deepan Mehta, Director at Alexa Equities, joins us on the show. Hi, Deepan. Good morning and good to see you. Well, the sector that's outperformed in the last two sessions is the consumption themes. That's the FMCG names. How do you approach this space? One would think that maybe, in fact, this government will focus more on the rural play and, help those companies. But maybe, in fact, no, they just continue with the development agenda. How do you approach these FMCG names after this rally? The index itself is up, I think, 5-6% in the last few sessions.
Yeah, good morning, Nigel, and thank you for having me on your show. I think FMCG also benefits from the fact that it has been under-owned, and it is a sector which has lagged the broader market, largely because the earnings have been very slow. A lot of product categories have got maturity, so volume growth is like low single digit or thereabout. And valuations were still pretty, I would say, rich from that point of view. So investors were underweight FMCG. And now I think, given the circumstances, given the election result, you need to have a few more defensive stocks in your portfolio. At the same time, I think a lot will be done to improve rural consumption. So from that point of view, FMCG certainly is an interesting sector to invest in. But I think that this is a flavor of the season, and overall earnings growth have been stagnating in FMCG. I don't see that changing materially. If rural starts to do well, then urban may kind of slow down. So I don't think that it's a sector to be overweight on at this point of time. And the real defensive sectors to be invested in, I think, would be pharma and IT. And from that point of view, I'm more positive on those sectors than FMCG. But if you still wanted to invest, I think some of the smaller companies in the FMCG space like Jyoti Laboratories, Imami, to an extent, Zydus, I think they could be more interesting plays because some of the categories that they are in, to an extent, are not as mature as some of the soaps and detergents and toothpaste where the large MNC FMCG companies are involved in.
Deepan, hi, good morning. Thanks for joining us. So, so much dislocation, right? That's the word which comes to mind. 12% swing in 3 days. That's the Nifty, and flat for the week then finally from Friday's close. But so many stocks still dislocated in that sense. Anything looks interesting from a sort of short-term perspective, which is maybe gotten beaten up a little bit more, or you think yesterday largely corrected that?
See, I think that, Prashant, the PSU defense companies, I think you could expect a trading rally over there. End of the day, the earnings season has come to an end and they have been the best performers over there. They have corrected a little bit, but there's a lot of appetite for that kind of earnings visibility. And I think once politics goes to the background over the next maybe 2-3 weeks or so, right now we'll have what we'll hear in the next couple of weeks is the portfolio allocation and who the cabinet ministers are. And then I think this entire, politics will die down, will go to the back pages. From that point of view, I think if investors' interest still remains very strong in the market and the SIPs continue the way they are, then mutual funds will tend to buy the stocks that they are more or less already invested in. They're just that they're available slightly cheaper. So I think that from a trading rally perspective, even from a short covering perspective, I think PSU stocks led by defense companies, you could see a trading rally over there. But I'm not sure what the longer term prospects of these companies given the very high valuations over there.
Okay, Dipan, hi, morning. Yeah, fair point. So you're saying long-term pure fundamentals, given the valuations, maybe not too clear. But let me ask you about the other theme. Now, if you want your portfolio to still have exposure to capex, manufacturing, assuming that these things are not going to go away, in the next government policy or the next budget, then just can you give us some stocks, one or two names that you would still be comfortable with in order to reflect the manufacturing capex play in a portfolio?
So I think there are some companies which I think have faced minor setback too. One, of course, is Praj Industries, our favorite in the capital goods sector. It has underperformed and it's got hit by government policy on what can and cannot be converted to ethanol. But I think export markets are growing pretty well over there. And eventually, I think India needs more and more ethanol capacity, be it from sugarcane or from grains. And definitely Praj Industries is a technology and a market leader there. Valuations are reasonable. So I do feel that amongst the capital goods space, that's one company which can do pretty well. Another company which comes to mind, which we want to look at only in terms of a correction, 15-20% above correction, is Action Construction Equipment, ACE. And that's amongst the largest crane manufacturing companies. I don't think that the kind of construction activity taking place on the real estate side and on the infrastructure side is going to slow down. And this company performance has been exceptionally good, and order book position also is pretty decent. And I think that if you get at a reasonable valuation, this is one company which can grow typically at 15-20% for next 3-4 years, purely on account of the industries it sells to are doing exceptionally well.
Okay, all right. Deepan, stay on. We have some more questions for you. In fact, the next topic we'd like to discuss with you is maybe CG Power. So get you some time to gather your thoughts. And let's hear out the management commentary first that, we heard in the exclusive chat. Now, CG Power will foray into the consumer business by selling appliances. That is a word coming in from Murugappa Group's Velayan Subaya. Speaking to Shireen Bhan on the sidelines of the EY World Entrepreneur Awards in Monte Carlo, where he's representing India, Subaya said that he was betting big on electric mobility and semiconductors as businesses. However, he ruled out any acquisitions in the near future, and he's betting quite big on organic growth as well as partnerships.
A new business that we're adding in that mix is the consumer business because a non-compete got over in 2021. So that continues to have a lot of opportunity. For the consumer business, we basically start with fans and pumps and kind of the more general electrical appliance areas, and then look at new areas for growth beyond that. So for the first couple of years, we'll just be establishing a beachhead in those areas, and then we'll start looking at what we can do from a growth perspective. Yes, so definitely, right now I don't see any more need for acquisitions in that space. So now we've got enough of a base knowledge and we will develop on it. We might have partnerships, but no more acquisitions is what I believe. So like you said, we've launched a three-wheeler. We will launch a 55-ton electric truck. What we will also be doing over the next 6 to 9 months is launching a small commercial vehicle, starting with a 3.5-ton GVW and then looking at different payloads. And then we will also hopefully over the next 12 to 18 months launch our tractor. And I do believe that both those products have a larger propensity to move to electric. And so that's going to be our big bet. I think the semiconductor industry is really going to mushroom in India. I think there's a lot of potential for it. Just because of the raw horsepower we have in terms of intellectual capacity. Almost 20% of the world's semiconductor design engineers are Indian, right? So I do feel like that sector has tremendous potential in India, and it's a sector that I personally am again very, very optimistic about in terms of the opportunities for the country. Government has been very, very fast with all of its approvals. We've just started the design and building of the factory in Gujarat, but these are quite complex factories to build. So our estimates are it'll be 2026 before we can basically start operations at that factory. But we're kind of going full steam ahead. We've got I would say over 50% of the senior level memberships of the team basically recruited, and we're basically working on the design and build at this stage.
Okay, so that's the story of CG Power. That's the management commentary. That's the thought process. Let's pull up the stock price as well. It's done well, but CG Power has not been that pole vault kind of a stock. It's been a gradual climber, and in that gradual climb, about 70% in the last 12 months, that is. And this year, let's check this year as well. This year, a more modest 40%. So that's CG Power for you. Deepan, we were just discussing themes, CapEx, industrial, consumer, economy that you can still keep in the portfolio. Does CG Power make the cut?
No, I think you were talking about CG Power's last 1 year stock price performance, but you go back 3-4 years, 5 years maybe, and it has gone up 30x. It's one of
That is true.
It's India's classic turnaround story, and certainly I think for the new owners, it has created phenomenal value. But a lot of CG products, CG Power's products are very traditional products, and they're doing exceptionally well just now because of investment taking place in electrification, distribution, and related industries. And I think that they're trying to do too many things as well. And it's not that the stock is cheap now. I think at about 70 times trading, 12 months, I think a lot of the positives have got captured in. So I would just like to, remain invested if you're already invested in CG Power. But from new investment perspective, need to look for stocks which are more reasonably valued below that 25, 35 times trailing 12 month with 15% type of growth rate within the capital goods space. And these stories will emerge also. See, we have a budget also coming up. And these days, budgets are more like a statement of intent or vision. And maybe the sectors that the government wants to now focus on, those also will be listed. And some stock ideas would come over there from the budget as well. So I would say that just hold your investments in the capital goods space. I think new categories may emerge over there.
Okay, all right. Deepan, I wanted your view on some of those Ferris names. I know they haven't been your favorite, but Kotak as well is sounding a little bit cautious on sale. They're saying that the valuations are frothy and the company is on weak footing from here on. Let's run you through the details are there. It's their top sell idea, target price of around 85 rupees, which implies a 40% downside. The reasons, as I mentioned, is fundamentally weak and also they're deteriorating is what they go on to say. Let's run you through the top points. They're saying that the volume growth will be muted in the coming years and the company will lose market share. To give you a couple of numbers, utilization levels are already high at around 84% and the market share in the last many years has declined from more than 20% to around 12% odd. And Kotak says they lose market share even from year on because their growth will be lower than their peers. In terms of deleveraging, they're saying that it's the end of the deleveraging cycle for them because the company is talking about adding 15 million tons of capacity, greenfield and brownfield capacity by FY31. So they're bracing for a period of high leverage, high capex, you have negative free cash flows, and that's a bit of an issue for them. Third point, in terms of valuations, they're saying valuations are very, very expensive. They've removed the EV upon EBITDA. They're saying SAIL trades at around 8.5 times EV upon EBITDA, while its peer set is trading at around 6.5 to around 7 times odd. And given the deteriorating ratios, they believe there's no reason why should it be trading at these levels. However, they put a note on privatization of SAIL as well. Some part of the street believes at some point of time, SAIL will be privatized. They make this point that the majority win, for the ruling government now is quite slim. So to push through an unpopular measure like privatization of SAIL will be difficult. And also SAIL has a very high employee base of more than 56,000 employees. So put all this together, Kotak is negative on SAIL and they have a target price which is much lower than current levels. Deepan, I want you to come in there. Ferris hasn't been your favorite. Will you agree with Kotak or do you have a contra view?
I tend to agree with Kotak, and I think that the kind of excess capacity which is there in China is going to play out in the global steel market, and it's going to be a bit of a cloud on Indian steel companies as well. We are seeing at the ground level that steel imports are increasing, and this quarter steel companies have been able to sustain their profitability because of lower raw material costs, but that also may change. But, Nigel, very positive on non-ferrous segment. And within the commodity space, I think non-ferrous, clearly the way the prices have gone up, I mean, across the board, whether it's copper or aluminium, nickel, tin, they're all about anywhere from 15 to 25% higher this year. And those gains have not been captured in the March quarter earnings. So I'm very positive on companies like, say, Vedanta, even a Hindalco. I think if they're able to successfully get the Novelis IPO off the ground, that would certainly kind of improve the balance sheet strength. And they are also going in for major expansion. Even a PSU like NALCO, National Aluminium, that also I think could be turn out to be a dark horse, because just purely on account of the fact that LME prices are significantly higher, and companies like NALCO, Hindalco, or Vedanta have pretty decent backward linkages. Like Hindustan Zinc goes right from mining all the way to the finished metal, and there's silver over there as well. So I think more than the ferrous, the non-ferrous metals will do exceptionally well this year.
Deepan, so just a quick word on the political sort of landscape and what it means for markets. So yesterday, for the first time, we saw, there was that photo up, there was that NDA meeting, and the sort of visuals will come up. So interesting. The NDA leaders, including now, of course, alliance partners, JDU, TDP, etc., all came together, but not just them, but others as well. And of course, the senior BJP leadership with Prime Minister Modi sort of attending and chairing that meeting. And actually all NDA partners rallying behind Prime Minister Modi and nominating him as the leader of the next government. And of course, the swearing-in is going to happen on Saturday. And after that, you can see visuals, right? Prime Minister Modi, and next to him, there is Chandrababu Naidu and Nitish Kumar there as well. Mr. Shinde is there and many others. So, and of course, there was that photograph which came through. That's, of course, those are visuals coming in through of the UPA meeting, I think, which happened a little earlier. And they essentially just said that we will decide on what is the appropriate thing to do at the appropriate time. I mean, cryptic, but not very much beyond that. Deepan, the swearing-in is going to happen on Saturday, but after that, there's going to be a little bit of jostling for ministries, top cabinet berths, etc. Now, one space which one can kind of see, which is done very well, is railways, right? You think that is in the play, and does it matter? Because so far, for the last 10 years, it doesn't matter who the minister really has been, because I mean, for the market, it has been Mr. Modi. But does it start to matter a little bit more now if a ministry like the railways is in the play between allies from a market perspective? Go on.
No, Prashant, who will take what is, of course, very difficult to call. But, one very important aspect of the second, or rather the entire Modi government, has been that they have had some exceptional ministers as well, like Jai Shankar, like the railway minister, the defense minister, the heavy industry. And it's the ministries who have been responsible in the fabulous execution which we have seen in the country for the last 5 years or so, 10 years or so. And the kind of PSUs under those ministries also, they have been kind of rejuvenated, and they have been more activated and more proactive in terms of their growth plan, improving their efficiency and contributing materially, undertaking large projects as well. So I think that, who the oil minister is, because that affects the PSUs. Of course, finance minister, defense minister are very important, but railway ministry, heavy industry ministry, I think they're all very important from the market's perspective, because we want ministers who can deliver. And there were a few in the Modi cabinet who did deliver in the last 5-10 years or so. So I think that allocation of ministries is very important. And that may set the tone for some of the PSU stocks that are so fancied by the investors.
Okay. All right, let's see. I think, it's going to be interesting to watch as this, portfolio allocation now happens, the responsibility sharing. Stay on, Deepan. We need to take a quick break. Just checking the gift Nifty. It's been showing a bit of a red downtick, I think, at least on my screen, about 25 lower. We'll see. Come back, and we'll also, of course, start talking technicals, get you, a couple of trading calls coming up next with Mitesh Thakkar as well as Sudarshan Sukhani.
Okay, welcome back. There's now about 9 minutes to go for the pre-open session, and we're going to watch what happens. But the GIFT Nifty is indicating an even bigger start. At 8 o'clock, it was 90 points. There's 125 now, so there is more from where it after what happened yesterday. But what to do in terms of trading action, right? Mitesh Thakkar is with us, and Sudarshan Sukhani is with us as well. Gentlemen, good morning. Good to have both of you here. Mitesh, you were out of action last couple of days.
Morning, Prashant. Yes, very much, and I'm glad I was.
He didn't miss much, huh? That's what we've been discussing.
So Mitesh is back, and he's Friday to Friday, nothing. What has happened? You're gonna just, but 12% swing and absolutely flat from Friday's close. What to do now, Mitesh, this morning? Go on.
So, Prashant, I think I was looking at the charts, and my preliminary understanding is that with the fall which happened the day before and the pullback yesterday, I think it's all over the place. But in the short term, if you look at the setup, one, it will be difficult for the Nifty to immediately get past 22,900, 950. So in the short term, that becomes my selling area, or if you have long stake profit area, and even explore shorting opportunities over there. But broadly, what comes out as a stronger trend is that we don't have a very pronounced downside. So maybe, we'll see some supply on higher levels, but the market will try and find some base at lower levels, and then we'll look to get into the upside kind of a zone. And FMCG and two-wheelers, particularly the auto pack, look very good to me. So I think that's where I'll explore fish more for long opportunities.
Okay, FMCG and two-wheelers. Got that, Mitesh. By the way, Sudarshan's been advocating staying out of the market, though he's been here, but he's been telling us not to trade the index. He's been looking at stocks. Sudarshan, morning. So is that strategy still on, or do you think now the market is settled enough to trade the indices?
Yeah, good morning. I think the market has settled enough. We didn't lose anything by not trading on the last 3 days, because it's not easy to catch these wild, spectacular trends. But today, the market should be much more settled. The VIX was falling yesterday. It should continue to fall today. Now, we are where we were roughly on Friday. So the trade still is that we are in an uptrend. We just have to ignore the declines we saw on Tuesday. I mean, we can't do anything about that. Closing to closing, we are in an uptrend, which we were earlier also pre-election. If we are in an uptrend, then there is only one trade. You have to still look to buy on dips. Now, I am agreeing with Mitesh, because I don't see the markets actually rallying above 23,000 in a hurry. Not now. So towards that level, you take profits. If you see a 100, 150 point dip intraday, then you go long in the Nifty. And that really applies to the Bank Nifty also. But the trade now is to be on the long side.
Okay, all right, got it. Let's also come down to stocks. Mitesh, what is your list like? And considering you're liking FMCG and autos, any of those names making it to your stock list today?
Good morning, Surbi. I do have two FMCG names. In auto, I think Hero Motors was a great pick, on the day before yesterday, but it's rallied a lot yesterday. So not a good entry point, but I still like the stock. But I have Bata as one of my recommendations. I think after a good decline, it's reversing. So buy here with a stop at 1404 for targets of around 1500, and ITC also makes the cut. Buy here with a stop at 424 for targets of 445. On the other side, I have a buy on Coromandel with a stop at 1340 for targets in excess of 1440. And Bank of Baroda is a sell call on a mild bounce backs around 262 to 263, which is a % higher than current price. Sell with a stop at about 270 for targets of 245.
Okay, got that. Sudarshan, what about you? What are your trades?
Yeah, just let me add for the Nifty. I also have a make and break level for the Nifty. That's around 22,400. Below that, we don't take the buy on dip strategy. Now, Aditya Birla Fashion is a buying opportunity with a stop under 260. HCL is a buy with a stop under 1,304. Muthoot Finance can be considered for buying with a stop under 1645. And finally, Nestle is a buy with a stop under 2386.
Okay, got that. Gentlemen, we'll have you back soon, but thanks for those trades, Sudarshan and Mitesh, with specific ideas coming through. Well, let's get a quick F&O perspective as well. Chandan Taparia, derivative and technical analyst at Motilal Oswal Financial Services, is with us. Chandan, good morning. Good to have you with us here. Significant volatility, but it's unlikely that day on day the scale of these moves continue. Do you think we kind of get into a bit of a more normal kind of market zone now? Your sense and specific trades.
Good morning, Prashant, Surbi. Thanks for having me. So what a roller coaster ride in the market. 2 days back, just after the exit poll, Nifty made a new lifetime high at 23,338. And on the next day, it corrected towards 21,281. So movement of 2,000 points. And again, we have seen a tremendous recovery of 1,400 points. And market is again back to the closing of the Friday. So we have seen a wild swing of 2,000 points, but somehow it seems that bulls are back and every small decline is being bought. We have seen a strong performance from the selective sector, which clearly indicates that liquidity, SIV flow, and the DI's money is supporting the Indian markets. So we need to look at the sector and stock specific. We have to continue with the overall trend that is bullish. We believe that till Nifty holds above 22,222 zone, every small decline could be bought for an upside move towards 23,000 to 23,110. That is the previous lifetime high. And once we stable above the same, then we can extend to the new leg of rally. But as of now, we are in a wider trading range. However, we have seen a corrective move in the volatility index itself. India VIX was down by around 30%. Volatility itself corrected from 31.71 to 18.6. So expecting volatility to go down below 14-15 marks. In that scenario, we may see some sort of stable move. But as of now, till it holds about 22,222, small decline could be bought for 23,000 marks in Nifty index. Now looking at the Bank Nifty index, here also we have seen a wild swing of more than 5,000 points, corrected from 51,100 to 46,000, exactly taken support at 100 EMA, recovered well by more than 3,200 points, and now immediate support for Bank Nifty is near 48,500. Until it holds, we are expecting it to head towards 49,500 to 50,000 marks. Now looking at the sector and stock specific, we have positive view on the auto and consumption name. We believe these two sectors could do well with margin of safety and lower volatility. The Nifty Auto Index itself is heading to the new lifetime high. It seems that most of the auto name are heading towards its top gear. So here we recommend you buy on M&M. However, we have positive stance in most of the auto name, including Hero Moto, M&M, Tata Motors, even counter like Escorts, Bajaj Auto. But here we are recommending to buy on Mahindra and Mahindra. The stock has been making higher top, higher bottom. Fresh breakout is clearly visible on the multiple time frame chart. So recommending to buy with support of 2680 and expecting fresh leg of rally towards 2870 marks. Second trading idea, that is buy on trend. As mentioned, that consumption could continue to be the theme. And this stock has given a consolidation breakout of last 26 trading session. We have seen built up of long positions, some short covering also seen. Rollovers were better from the previous month to current month. So recommending to buy with support of 4,800 for an upside target of 5,150. Last trading idea, that is also from consumption, Godrej CP, Godrej Consumer Product, exactly taken support at is 50-day EMA. Momentum is clearly visible after the consolidation breakout of last 20 days. Cheerful swings could continue towards 1,500 plus zone, so one can buy with support of 1,390 marks.
All right, Chandan, thank you very much for that advice and all of those trading calls. With that, we do have to take another quick break. We'll come back on the other side. We'll have the pre-opening rates. And also, we'll touch base with Abhishek Gaushande of Sharekhan by BNP Paribas. We'll put the spotlight on the auto space. A lot of the technical experts so far in the morning you've heard, they're all saying that autos is a good place to be in. We'll do a fundamental check as well. Welcome back. Well, the first of the rates are coming in, but let's wait for them to settle. I mean, the short pointers are on the upside, and that was the indication even from the implied open. But let's see whether it's as good as this or not. Some of the early movers are TCS, NTPC, Power Grid, State Bank of India. These are some of the stocks, the early pops on the green side of the screen. But as promised, let's now turn the conversation towards the auto sector. You've heard a lot of our technical experts say that perhaps autos would offer a good opportunity right now. We've got Abhishek Gaushande joining in from Sharekhan by BNP Paribas. Abhishek, good to have you on. You know, a lot of the auto sales data, the more intricate analysis, that was completely overshadowed by all the election madness. So I just want to start there, actually, because what we saw in the month gone by, the month of May, is that there's a tapering off in a lot of the passenger vehicle, names. There was either a flat or a, degrowth sort of a trend in most of the names, including, I think, a Maruti, whereas CVs were looking slightly better off. Let's start with some of the passenger vehicle names like an M&M and a Maruti, and what's your take there?
See, in contrast to that, what I believe that the numbers reported by the most of the OEMs in in both the month in April and May have been decent, given that it was expected that Q1 would be a slow quarter or a weak quarter as election season is going on, and because of the heat wave and this Nautapa and lack of any festive season or a marriage season. It was expected to be a muted kind of a quarter, but in contrast to that, most of the consumer players like you say the PVs or the two-wheelers have reported decent numbers, and along with that, it has also been right that the inventories have been increasing in the PV segments, and now you can see that the PV players are coming on the mode to stimulate the demands. In last few days, that Maruti has reduced the prices by 5,000 in the automatic gear segment, and second, it has introduced few limited range of products in the entry level segment with the price tag of rupees 4,99,000. So OEMs are taking the benefit of this weak period to stimulate the demand, and we believe that once the marriage season would start, likely to be from the July onwards, as that there was no Viva Muhurat in the month of May, and there was only one Muhurat in the month of June. So there would be 8 Viva Muhurat in the month of July. So what we believe that the retail sales would start picking up from July because of the marriage season, and in the two-wheeler case, we may see along with the marriage season, the opening of the school and colleges would kick in the demand in the coming minutes. So whatever we are seeing currently is an inventory buildup, and retail sales would be visible with a lag.
Okay, Abhishek, just specifically on Maruti, since you mentioned that, I mean, their local sales were up by about 3-4%. Exports dipped quite a bit. I mean, is this just a one-off, an inventory issue maybe, or would you read anything into it, this 30% drop in Maruti's exports?
Now again, there is a contrast that the performance of the two-wheeler segment was driven by the export, and you are mentioning that the export was a little bit weak in the case of a Maruti. But in the case of a Maruti, it's a difference in the timing of the shipment that happens. So month-on-month change in the direction of month-on-month change in the quantum of the export is not a big concern or kind of a thing which we have to note, especially for Maruti. It may make up in the coming quarters because it's a kind of a long-term kind of a contract it has with its overseas distributor partners.
Okay, all right. Hi, Abhishek. Morning and good to see you. When I wanted to ask you about Mahindra and Mahindra. You know, if I look at an outperformer of the last 1 year, that stock has close to doubled. Large cap name, I think it's the outperformer from the Nifty as well as from the Nifty Auto Index. What's your view on it at around 2,700 rupees per share? Is the good news in the price, or do you believe there's more to come?
It's right that the larger part of the positives have already been factored in. But what is positive happening with the M&M is the completely change in its automotive business, given that it was expected that the tractor cycle may see a kind of slowdown in this current year. But what is happening that is the automotive segment has been now on the driver's seat, which was earlier completely it was dependent on the tractor segment only. But now the automotive sector is contributing a higher share in the EBITDA. Plus, in the case of the PV segment, whatever been expecting for the PV cycle is PV sector is a 5-6% kind of a growth in FY25. But what we believe that the M&M may outperform the PV segment in this particular year because of the increase in the capacity. And second is that it has a very strong kind of a order book. So roughly, I think excluding 3XO, it has around 2 lakh units, 220,000 kind of a order book. And with this 50,000 kind of order book, roughly you have a 270,000 kind of a order book. So both the things are in its favor. So we believe that in PV segment, it may outperform the overall industry. Plus, in the tractor also, it has a pan-India presence and in-house financing arm. So considering these two facts, we believe that even though in last quarter it has lost some kind of a market share, we believe that in FY25 it may recoup the market share, and EBITDA margin trend, what it has been reporting is appears to be quite sustainable. So this, considering this, we are positive on M&M.
Positive on M&M. Finally, Abhishek, tell us what you think about CVs, because the numbers look very interesting. After a long time, double-digit CV growth by Ashok Leyland. I think even Aisher's CV performance was good, 10% if I have the right numbers. So Tata Motors CV business was a little more flat. What is happening? Is this just a flash in the pan, or is this telling us that perhaps there's recovery ahead in CV?
In CV segment, it was quite expected that the quarter one would be relatively weak because of this election season, as we have seen in the October-November period also when there was a state election, the CV segment see a kind of a slowdown. So that is more in line with the estimate. But what is now going forward, we are looking for a recovery from quarter two onwards, and we believe that the H2 FY25 would be better than that of H1 FY25. Plus, what we are looking more in the CV players is the margin plays, that most of these players are now reporting double-digit kind of a margin. So we believe that even in the case of a slowdown in the volumes or a flat to or marginal growth kind of a scenario, most of these players would sustain their EBITDA margin, and that is the more important thing to drive earnings and to sustain the valuation. So we are more concerned on the margin side than that of the volumes, which we believe that would come over the period because of the aging population would drive the replacement cycle, and the macros would take care about the structural play in the CV segment.
Okay, all right. Abhishek, appreciate you joining in. Thanks a lot for joining and giving us your take on a couple of those stocks. Well, it's almost 9:10, so let's get Sudarshan back on the show. Sudarshan, what's your 9:10 call?
Consider buying Muthoot Finance with a stop under 1645.
Okay, all right. We got that. Muthoot is the one that Sudarshan's looking at. Mitesh, what about you? What's your 9:10 call?
Morning, I'll choose a buy on Bata with a stop at 1404 for targets of 1500.
Okay, Bata. So we got that. Muthoot as well as Bata. We'll keep an eye out on both those two stocks. Thanks a lot, gentlemen. Well, let's do a quick revision of some of those stocks that will be in focus today. Sonal joins us to tell us about the CGD players that she's tracking. Sonal.
Two news pieces here. First, of course, is a brokerage note that is coming from Citi, and it is on the oil and gas space, specifically on the gas space, where they retain their constructive view on GAIL, IGL and MGL, which are the preferred picks for the brokerage. They believe consolidation in the CGD sector is likely going forward, and consolidation could benefit the larger and the more experienced CGD in this space. They say that NDA government could consider bringing gas under the GST regime, and something that other analysts have also spoken about. And if that happens, that could benefit the entire gas value chain, because remember, in some of the cases, input tax credit is not available, and that leads to costs going higher for some of these players. And if it is under GST, that would mean seamless movement in terms of input credit and lower costs as well. So that's why they think a possibility of them coming under GST would be positive for all these gas players. Additionally, PNGRB has put out a draft notification. This is for city gas distribution companies to establish and operate LNG terminals. Now, remember, a lot of these companies are talking about expansion away from the core business as well, and there is a notification in this regard right now. The LNG infrastructure would include receiving, storing, regasification and transportation of LNG, and any entity that is desirous of establishing or operating an LNG terminal should submit an application to the PNGRB, and they will also have to furnish a guarantee to the PNGRB, which would be 1% of the total capex of that terminal, or 25 crore rupees, whichever is lower. Board, after examining the application, may issue certificate to commence operations for a period of 30 years. So, of course, it's a draft right now, but something has been put in writing for this particular project, and that is why these companies will be in focus.
All right. Sonal, thank you very much for that. So keep an eye out on these names as we begin another session today. BSE is the other one we are focused on. Sudarshan is here to tell us why. Sudarshan, morning again.
Morning, Prashant. So keep an eye on BSE. Jeffrey has written a note. It is a buy call with a target of rupees 3,200 per share. And this note has come after SEBI has formed an expert panel to review ownership structure and finances of clearing corporations. And this panel has to suggest alternatives which will keep in view periodic capital needs of a clearing corp. And the reason BSE in focus, because it owns 100% stake in its clearing arm, that is ICCL, which is known as Indian Clearing Corporation. And in the last fiscal, ICCL contributed 28% to revenue and 32% to PBT of BSE. So this is the reason that BSE can be in focus in today's trade.
Okay, all right. We'll keep an eye out on BSE. Thanks, Sudarshan, for that. And let's wind this down then with Vivek, who's joining us to tell us about IEX post their business update. Vivek.
Well, that's right. We highlighted this earlier, but good to keep in mind again, given the fact that the May monthly operational update that the company has given to the exchanges is quite strong, especially in terms of the volumes that has happened as far as the short-term power market is concerned. Total monthly volumes has jumped up almost 29% on a year-on-year basis. Electricity volumes, the pure electricity volumes is up 21% on a year-on-year basis, and the DAM price, clearing price, that is the day-ahead market clearing price, is almost at a 20% discount to bilateral power, thereby going ahead and ensuring that power buyers would prefer the short-term market. Now, what is it that the company is saying? They say that they continue to see increased sell-side liquidity, given the fact that, number one, the government regulation on sale of surplus power should come onto the exchanges, increased fuel supply, and also higher availability of generating units. Strong operational update that should keep IEX in focus today.
Okay, I think we are sort of hitting market open in about 2 minutes' time. Vivek, thank you very much for that. So the pre-open has left us with a 180-point gain. So this is a very good start once again, and almost 700 points on the sensex. Specific news-related stocks, of course, we will keep an eye. As Vivek highlighted, as Sudarshan highlighted, the CGD names as well as Sonal highlighted. So these are some of the individual sort of news impact which we will track. But I think there's also a sort of pretty large swath of stocks which I think are still, they could still be moves based on what's happened basically over the last 2 days. The names are on your screen, but these are all just pure news-related ones that are coming through. I think a few seconds more and then we'll have the open to begin the session. IEX is the pre-open at least showing a 3% pop. It's got decent volumes, by the way. 168 or so is where we are at right now. Watch commodities as well, metals as well. I mean, SAIL, of course, as Nigel highlighted. I mean, I don't know if we can put that up and see what's happening in the pre-open. But SAIL is down about 1/3% or so. Beyond that, I mean, some of the other steel names, etc., Tata Steel, etc., had a big 5-6% kind of a pop yesterday. The other one, of course, is Vedanta, which had been sulking for the last couple of days, I think popped up about 4-5%, and so on and so forth. So lots to track here, and let's get this going with the first rates. FMCG.
Let's see if those massive moves that we saw yesterday, whether there'll be more of that or whether that was the first knee-jerk sort of thought that, okay, we need to sell
and actually,
in front by FMCG.
There was a long list of smaller mid-cap consumer names which also moved. We'll see all of that. 100 plus on the Nifty, so 98, 86 tracking there. 22,700 around is where basically the Nifty is finding some gains at. I mean, 65 now, so immediately after that exuberant open, there is a bit of pullback, but 30-40 points. The scale of the moves have been so large that 40-50 points is small relative to that recent moves. Nifty Bank is up 150 points, 49,200. I mean, that's a more steadier start. But in line actually with the Nifty. The mid-cap index is up 1.25%, and the small-cap index also will come up on your screens, and it'll tell you what's happening. Many of these individual names, and I think a lot of the PSU names are at the bottom of the screen, and private banks as well. Financials, a lot of them right there at the bottom of the list. But that's indices for you. Let's get it with stocks and what's happening, guys.
Interestingly, I'm just starting with the whole FMCG move, and after 2 good days, that seems to have taken a bit of a back seat. Start with the larger stocks. Lever, for instance, is cooling off about 2% lower. Look at Britannia, it's also on the lower side of the screen. So pretty interesting. The market really swings big ways. I mean, and sentiment is a wild pendulum, you can perhaps say that. So, in fact, even some of the smaller names, if you're looking at stocks like Imami, Marico, Honasa, all of these were surging yesterday. Today, there's some cooling off. Dabur, etc., some cooling off on quite a few of these names. So what is working? I mean, FMCG obviously is kind of off the charts, at least for now. So is Pharma. Cipla is down, Sun Pharma is down. So that whole immediate knee-jerk risk-on trade is now off. So let's see, what is the market buying? We've got a lot of the larger stocks and PSUs, by the way, at that, which are back in focus and back in favor. NTPC, SBI, ONGC, Coal India. These are the ones that are really up and about. BPCL. So, the top tally on the Nifty is actually all PSUs. And then you have some names like Infosys, HCL Tech from the tech space, Wipro. So, tech is good. PSUs are good. ITC is seeing some buying. Those are the pretty early trends. And actually, on the PSUs, just to note, even in the broader market, beyond the Nifty as well, there's a lot of buying. BHEL 7%, NBCC 7%, NHPC 7%, PFC 6%, Aircon, Hudco, GAIL. It's just a long list. RBNL, BEL. So the pendulum has been swinging wildly away from PSU, away from CapEx on June 4, and today is a very, very different day as some of these stocks are back in the radar and the PSU rally is cooling off.
Well, that's right. So there'll be a couple of stocks that we highlighted yesterday. If Amravati is going to be in focus, then stocks like KCP are well positioned. We'll have to see how that dream plays out. Yesterday, the stock was up close to around 18-19%. A lot of the TDP spokespersons are talking about Mr. Naidu taking oath in Amravati in a couple of days and then focusing on their development plan as well. The stock is up close to around 18%. Just to alert our viewers, for this week itself, it's up more than 35%. So take note of that before taking a fresh call on the stock. Heritage Foods, that's the other stock where Mr. Naidu is the promoter entity. And that one, in fact, is up close to around 10%. And in this week, it's up more than 45%. I'm looking at the profitability of the last year was around 100 crores. Some believe that that will improve dramatically because they had some, low margin products that had to get sold in the past year. They're also focusing on higher value-added products. So that's why that stock, in fact, is moving up. But as of the last year, the profitability was only 100 crores. They're expecting it to move up drastically. For the timing, it's running on that, new Chief Minister of Andhra Pradesh, Mr. Chandrababu Naidu. So that's why, in fact, that's doing pretty well. A few more notable movers. You have Kochi Shipyard. That stock's flying away in today's trading session. It's up close to around 8%. Keynes as well is moving very, very well. So these are some of the top volume movers as well. And Titagar is another stock that's up and about in today's trade. Hudco, stock took a bit of a break. Week to date, mind you, it's still down close to around 10%. But for today's trading session, it's up close to around 7%. PFC and REC, they are back on the buy list. Both those two stocks are higher. And Snowman Logistics as well. Yesterday the stock was up close to around 8% odd. The promoter entity has been buying from the open market out there. And in today's session as well, Snowman Logistics is up close to around 3% odd. So keep that one as well on your radar. Prashant.
More normal markets, guys, and things are looking a little better, much better, and more settled. On wild swings in either direction, but that's exactly what we've had. Pull up NTPC, if you will. It's one of those stocks which is still, it's of course one of the largest published names. The recent high was about 393. It's still at about 355, even with today's 4% pop. When you're talking about Coal India, I was making this point yesterday morning. It's not as if the space is done and dusted, but I think there should be a little bit more focus in terms of larger, more liquid, more quality names. Coal India, the high was 527, stock still at about 468. Keep an eye on a few of these names. Market breadth, I have to say, is I think about 9:1. 9 advances to 1 for 1 decline. So it's overwhelmingly on the positive side.
Just wanted to point out one more space, Prashant. That's housing finance companies. Interesting moves on Aavas, on Home First, or in LIC Housing Finance. There was a note this morning on Jefferies. Now, again, people are guessing what the government is going to be doing, and Jefferies believes that there could be some more SOPs and, a little more sweeteners added to that affordable housing scheme, and that could work well for these
Now, on the day of the election, if you remember, we were talking Nal, Jal, what next? Housing, perhaps, right? As a bit of a focus area.
And he's been saying that, right? That they've made, I think it was 3 crore houses, and they're looking to add a tally and go up to 4 crores in the third term. So
it seems like a natural area to focus on. So we'll see. These are big moves. PNB Housing, for example, had a big move yesterday, so it's a little quieter today. It was up about 7-8% yesterday. All right, what else? BHEL is seeing a sharp up move. BHEL is the number one volume-led gainer right now, 275, so coming back up. So that power theme is still very much there. I sort of mentioned NTPC yesterday. Then look at REC and PFC. Both are up 5% apiece. 481 on REC, 469, 470 on PFC. The defense names, BEL is up 5.5%. So 274 on BEL. Adani Power, it's basically it's Adani but also power. So 5.5% there, 767. It had a big euphoric move on Monday. NHPC is up 6%. Again, power. There is RVNL, which is up 6%. Cochin Shipyard is coming up with a 6%. 8.5% pop. So 1827. This is, looking at this open and the kind of stocks which are moving, this looks like it's almost business as usual from a market perspective, right? So there was that shift to the consumer staples kind of name for a day, 2 days, but it's right back. Hudco is up 7.5%. Hudco, these are large moves and very large volumes right out of the gates. EIL is up 7%. EIL, Engineers India, 231 on EIL. All PSUs. IRCON is up 5.5%, 6% actually, 252 on IRCON. BEML is up 7%, 3935 on BEML. Garden Reach Shipbuilders is up 8.5%. There was a bit of a break with PSUs, but they're back. And how 1280 on Garden Reach. I can spot more names here. Century Textiles, of course, there's that sort of news flow. With regards to Birla Estates, Sonal highlighted that 10% on Century Textiles. Stock is past the 2,000 rupee mark. NLC India is up 7%. That's Neyveli Lignite. And so on. Railtel is up 6%. And volumes are not lacking at all. It's a big volume-led open that we're seeing. There is Chennai Petro, RITES, GSFC. I could go on with the kind of open that we have got. Really vibrant and PSU-led through and through is what you're seeing. 100-plus points in Nifty, but it doesn't show you what's happening beneath the surface as I read out these names. Pankaj Tibrewal is with us. He's founder and CIO at Ikagai Asset Managers. Pankaj, good to have you with us here. Good morning. Thanks for your time. Prashant this side. It's as I was just reading out these names, these are return of the favorite, which is PSUs in a very big way. I remember we spoke, briefly over the last couple of days, and you were saying that maybe, start to look at some consumer type of consumer-facing names, right? On the more value side. Is that still your view, or do you think anything has changed at all over the last couple of days? I mean, you're someone who looks at fundamentals and valuations very, very closely. So I think your problem was not really the election result per se, but valuations to begin with. So let's start there, Pankaj.
Good morning, Prashant. I think the verdict had surprised everybody in the market, but it's business as usual because the mandate continuity would be there. What I've been saying is that when I look at the data points, let's look at 3 or 4 data points. The first data point is that the last 4 years, the rural spend has been flat at about 4 lakh crores. But when you look at the capex expenditure, it has moved from 3.4 lakh crore to be expected to be 11.1 lakh, which is almost a 3x jump in capex. The second data point is the private consumption expenditure has the slowest pace in the last 21 years. And don't forget that private consumption expenditure is about 56% of GDP. The third data point is that agri growth has been the slowest since 2015-16, when there were 2 consecutive years of drought. When you look at these 3 data points, and along with the fact that FMCG weight in the NSE 500 is at a 13-year low, and also the fact when you analyze the results on the election day, about 65 to 70 seats were lost by BJP, mostly on the rural belt. So our sense is that going forward into the next 12 to 18 months, a lot of resources could be diverted to spur consumption, because that's the weak data point which is there in front of all of us. And the message is loud and clear. So I think there could be some shift. I'm not saying that the capital expenditure would be stalled completely, but the 24% CAGR growth which we saw for the last 6-7 years probably can come down, and that probably may not bode well for a lot of names which are very highly priced. I think from a portfolio standpoint of view, I believe few things need to be done, because market will see readjustment as you move ahead. And what are those readjustments? One, I think it will be back to basics in investing. I think quality will be preferred over momentum investing. One should avoid the low free float stocks which are there in the market. One should not get carried away by only narratives, and also give precedence to quality and fundamentals. And over the last 2.5 years, we have seen a huge breadth being positive. I think the narrow down of the breadth could happen now, and it could be back to growth investing versus value investing, which we were seeing for the last couple of years. And I think if you don't readjust to the portfolio, it could be painful from the next 18 to 24 months perspective. But looks like some readjustment will go through as you move towards more policy making changes in the next 6 to 12 months.
Pankaj, hi. Good morning. Good to be speaking with you. The thing with these words, value and growth, is that I think in the last 12 months, the lines really started getting blurred. what were traditionally value stocks, right? I mean, they started behaving like growth stocks, trading at 70, 80 times P. And to be fair, in some cases, even earnings were coming in. So I think it was getting really confusing. But let's talk sectors, right? Because the market's narrative has shifted very quickly in the last 24 hours. On the result day, it was all about now there'll be populism. We need to be buying more rural-facing stocks. If you see the screen today, there seems to be hope that NDA 3.0 will stick to the capex agenda. Which one do you think it will be?
Surbi, I completely agree that they will stick to capex, investment-led growth, but we have to see what stocks are pricing in. The stocks were pricing in a lot of growth, and I think we will be a little surprised that managements would find it difficult to keep up to the expectations of the market narratives in the near term. Also, I think the valuation and margin of safety is limited in a lot of those industrial cap good stocks. Don't forget, 4-5 years back, when I was in Kotak, we were the first fund house to call for China plus one, manufacturing as a great theme. But I think at a price, I think most of these stocks look to be quite expensive, and the margin of safety is extremely low. We believe that when you look at the other parts of the market, I think markets are offering value there. One is pharma. I think pharma has kept surprising us on the earnings upside over the last 2-3 quarters. Private sector banks looks to be very well poised in terms of valuations. Some of the consumer names on both urban and rural discretionary looks to be quite good. And overall, I think it will be market breadth which will narrow down. It will not be the same broad-based breadth which we have seen. And also we track one ratio, which is high P to low P stocks on NSE 500. That ratio made a peak, which is high P stocks made a peak somewhere around 2021. And we saw the value trade of low P stocks played out extremely well. I think the big leg has played out. And from here on, we should see quality return back as a style from a portfolio perspective.
Pankaj, just a clarification. You said margin of safety is limited only in capital goods stocks or in any other part of capex / manufacturing as well? Just wanted to get the sector right.
So a lot of PSU names on defense railways, the margin of safety is less. A lot of capital good names, the margin of safety is less. And hence we believe that one needs to be prudent in terms of risk in the portfolio. I think risk has been underappreciated for the last 18 to 24 months. But if there will be uncertainty as you move ahead, because finally you have to accept it's a coalition government, there will be pulls and pressures across. And let's see how market takes it as you move ahead. I think the immediate focus will be on the government formation. And then over the next 45 days, the budget will be presented. And we will see how and what's the narrative in the budget going forward.
Hi, Pankaj. Good morning and good to see you. When you said that you all were on that China plus one theme, in your earlier avatar, and you got it spot on. I'm just looking at the near term. A few days ago, you joined in. You were talking about FMCG. Boom, those stocks did quite well. So it's calls like this that that make you quite happy, I'm sure. But a couple of quick questions. On the Nifty itself, we made a high a few days ago of around 23,300, 23,400 roughly. Do you think the near-term peak is done for the Nifty? And also, since we're talking about the cabinet formation, now since you'll have a couple of allies, some part of the street is a little bit nervous. What if ministries like Defense, Railways go to some of these allies? Will it, change things? Will it, derail that entire growth, the entire measures that we've seen in the last 10 years or so?
So answering your second question first, Nigel, coalition government is not bad. Except the last two terms, which is 2014 and 19. Since 1989, India has been used to coalition governments, and we have seen growth despite of that. And don't forget, the biggest reform year was 1991, when Congress was in minority, and we unleashed the major reforms which the country has never seen. So I'm not against coalition, but it will have its own pulls and pressures, which will show up in the decision-making over a period of time. But our sense is that when I look at the data points from a rural perspective, and the spend which has not been there for the last 4 years, and the consumption has been slowest in the last 21 years, I believe that some part of the resources from the government side will be directed towards spurring consumption in the near term, and I think markets will adjust towards it. We believe that the earnings downgrade cycle in the entire consumption space is behind us, and probably from here on for the next 24 months, we should see an upgrade cycle starting to begin, or probably if not, earnings downgrade should stop. On the first question on markets, I am not a great market timer or a technical analyst, but let's look at the fundamentals. Nifty ended with 1,005 rupees of EPS last year, which is FY24. If I was to state street expectations, I think markets are pricing in 1120 to 1140 of earnings on a consensus basis for FY25 and about 1240 of earnings in FY26. When we look at that number and look at the market, I think markets generally bottom out at about between 16 to 18 times 1 year forward. And that's the number you should work out to see where you need to be aggressive in the market, despite all negative news at that point of time, when that earnings or the P multiples come in, which is 16 to 18 times 1 or 18 months forward earnings. And I think that's something which will give you a fundamental anchoring from a bottom-up perspective.
Okay, all right, Pankaj, always good hearing your thoughts. Thanks a lot for joining in, and we look forward to chatting up with you as this market moves on. Well, let's move to our next management then. Uno Minda, they have partnered with Chuso Nuance Automotive to strengthen their electric four-wheeler portfolio. Mr. Sunil Bhora, the Group CFO of Uno Minda, joins us to talk about this development. Hi, Sunil, good morning, and good to see you in. Well, tell us more about this technical license agreement that you've signed. You know, one of the positives that the street is viewing this with is that it will increase your kit value. And I'm reading a Kotak note. They are saying that the kit value could approximately be around 1.5 to around 2.5 lakh, which is much higher than what it is currently. Your comment on this?
Yeah, Nigel, thanks for the opportunity. Yes, I think, as you know, for two-wheeler EV segment, before I come to four, I just give a little bit background. So we have been front runner in terms of setting our EV portfolio for two-wheeler and three-wheeler segment. And I think we have been communicating that we are working on the four-wheeler EV segment also. 3 months back, we have signed a TLA with Star Charge for the EVSC or the wall-mounted chargers. Yesterday, the board has approved signing of TLA with Innovance with the intention of converting that TLA into a joint venture subject to approvals. Coming back to the TLA, the kind of product profile which we will build will be sort of, we will have an e-motor, we will have an inverter, we will have a power supply which includes OBC, DC-DC converters, etc. Then you have e-compressor, e-controllers, e-axle. So there is a multiple products which will come into fold from the EV perspective. We all know that India EV market is growing at a significant pace. Last year, the PV segment has grown by almost 70-80%, and the market looks very, very aggressively. Government is focusing on green energy. So with all this put together, we believe that we will be the front runner in the four-wheeler EV space as well, like we have been in the two-wheeler and three-wheeler EV space.
All right, Sunil, but that didn't answer the question, right? The kit value of these e-axles along with AC chargers can range between 150,000 to around 250,000. Is that a rough number we should work with? That's a good range?
You are right, Nigel. I think that's a good range to work because a lot also depends on the size of the car, whether it's a 50 kilowatt or 80 kilowatt or 150 kilowatt or a 200 kilowatt motor, etc. So broadly, the range is right, but a lot also depends on what the market is absorbing, whether market goes with the lower segment, A segment EV cars, or a B segment or a C segment. But broadly, the range you spoke is right.
Also, another number there, Kotak is estimating that the supply of e-axles and chargers, it can be close to around 2,600 crores as in terms of revenue contribution for your company, Uno Minda. I'm just doing the rough math. It appears they are factoring in around 1.3 lakh units. Is that math as well reasonably on those lines? The aspiration is to get around 2,600 crores. Is that correct?
So Nigel, we don't speak about numbers because eventually it all depends on what is the size of the EV market going to be. So and it's only a multiplication factor, what you just spoke about in terms of the kit value versus the industry volumes and our share of business. So it's, I think, anybody's guess what's the EV penetration going to be and what will be the application factor in terms of various categories we spoke about. So on a broad range, yes, I think we should be looking at a significant revenue potential from this business. But as of now, I won't comment on the absolute numbers because, as I said, the EV volumes itself is very unpredictable range as of now.
Penetration now, Sunil, hi, morning, Prashant here. The penetration is 2%, right now, passenger vehicles?
That's right.
This note that Nigel is assuming 20% electrification of passenger cars, passenger vehicles by 2030. Is it 2 to 20% is a big jump, right? You think it's possible once it kind of picks up? Electrification, of course, is the future. Timelines, of course, we don't know. But your own thoughts?
Definitely, Prashant. I won't comment on the year, but 20% will definitely be a number, maybe 2030 or 32, because what we see as of now, there are projections of 17% by 30, 20% by 30. Everybody has different assumptions, and that's why I said normally we don't comment on the penetration or the volumes. But yes, as we move forward, I'm sure market will see at some time 20% penetration as well.
And these are products which you also sort of highlighted, right? Which is combined charging units, e-axle, inverter, motors. These are all. So you get the technology for all of this. Okay. And this is going to be, obviously, I mean, the agreement would be that you sell this here in India to OEMs here.
Yeah, we manufacture and sell in India. You're right.
Okay. And have you already spoken with OEMs with regards to this? I mean, you're obviously in constant conversation. So you would have done a check about, what is the sort of competitive landscape in these products like, and what's the scope?
Absolutely, Prashant. Like any new business you get into, you will obviously speak with your customers, and we have spoken with a lot of our customers who are working on a very aggressive EV profile. We also know the fact that the market is small and it will grow. A lot of our customers are maybe importing or maybe working to see how we localize. Also, I think it's important to note that our partner, Suzhou Inovance, they are one of the largest in China. Their revenues are almost like the group revenues are over 4 billion, and their automotive business itself is more than $1 billion. So very sizable company. They are dealing with a lot of larger players globally for these EV products. So I think that also gives us a head start in terms of your discussion with your local customers.
Okay. Sunil, I just want to sort of get a big picture perspective with you as well. You ended the previous fiscal with revenue of over 14,000 crores, right? And I mean, a lot of different parts of the business are firing. If I have the right numbers, your EV order book is close to about, I think, 3,800 crores. So just give us the overall snapshot for this year as well. To what extent will you be able to grow the EV business? And, is it at similar margins to the rest of the business? As the EV business grows, basically, is there any reason to expect an improvement in the margin profile? You're at about, I think, 11.5% margin, right, as of FY24?
Yeah, it's 11.3. So year on year, we increased almost 20 basis points. But to the order book, as we said, I think number is right. 3,700 crores is the annualized revenue we speak about. It's not a cumulative order book. We always speak about the annual peak revenue. And this is, as I said, this is all based on what our customers are guiding us, maybe inside like FY26 or 27 in terms of the volumes which they have guided us. And always the volume is the sort of a joker in the pack. But yes, that's the number. In terms of margins, I would say a little early to comment on, because as of now, volumes are very less. But as we move forward, as we build scale, as we achieve those kind of revenues, we do expect the margins to be broadly in line with our average margins. But yes, they are as of now a little lower because, as I said, the volumes are small, the costs are all fixed, and also there is a lot of bought-out components. So all in all, yes, margins today may be a tad lower than what our group average margin is. But as we move forward and as volume ramp up, we do expect improvement in the margins as well.
So just to clarify, when you say order book of 3,800 crores, so I mean, that's annual. In FY25, you're expecting to book revenue of 3,800 crores from the EV business, correct?
627.
26, 27. And where is that revenue number now for EV?
So as of now, if you see our revenue number for EV segment and for the last quarter, because I think it's important to see run rate because market has been growing sort of phenomenally. So last quarter, I think we have delivered almost 180 crores. So if you analyze that, there is almost like 700 to 800 crores of the sales for last quarter in terms of analyzed number.
Okay, just one final clarification on this TLA that you'll have signed. Will you all be paying some royalty? If yes, could you quantify it?
No, I won't be able to quantify, but I think in every relationship, every joint venture, you have a technology partner who brings on board the technology. You obviously pay royalty in return, and also as Uno Minda, we also get some sort of a management fee to run the operations and all other support to the joint venture. So it's sort of a win-win. It's a partnership approach. And yes,
but you can at least give us a rough number about the royalty, the technology you are getting, which is fabulous and is showing good growth potential, good kit value as well. But what could it be? A couple of percentage points. Just give us a rough range at least.
Very difficult, Nigel, as of now. So it's a little confidential information, so we'll not be able to share the number as of now.
Okay, Sunil, you've given us what you could. Next time around, hopefully you could give us the royalty number as well. For the time being, you're seeing this collaboration good for you. It increases the kit value. It helps you all in the four-wheeler powertrain as well. And revenues could scale up to higher levels by 2030. Kotak puts that number at around 2,600 crores. Thanks a lot for joining in and filling us in with those details. For the time being, though, we'll slip into a short break with news that the markets are holding strong. We'll get chatting with Varun Lohchab, the head of institutional research at HDFC Securities, for some market talk.
Welcome back. So this is a market that's holding on to a gain of about 0.5% on the index. And that's the Nifty. The Bank Nifty actually is in step and is managing an equal sort of a gain as well. SBI, about 3.5% on the higher side. The story of the morning is a rebound in PSU stocks. And as of now, at 9:45, it's still intact, but it's a long day ahead. So let's see how it goes. Let's take the conversation forward. Varun Lohchab of HDFC Securities is our next guest. He's the head of institutional research over there. Varun, good to have you on the show. I was just going through your note and, it seems that you have had a bit of a cautious stance even before elections and now, given the new reality, that continues. But tell us what you've made of all the things, this huge volatility. And the big debate right now is whether the capex tilt is going to shift a bit to rural, to more mass, to more populist. And therefore, if that's the kind of portfolio shift that investors also need to look at.
Yeah, hi, good morning. So correct, I think the volatility has been very high, but if you look at YTD returns, they are still in that 3-4% zone. So despite going up, down, markets have been largely flat and, which is what our point was in February when we had written a note that, going forward, next 12 to 18 months, returns are going to be quite muted across all the three indices, which is large, mid and small cap. And we still continue to hold that view. In light of the elections, I think the only change that we probably foresee is some degree of shift in expenditure towards the rural or bottom of the pyramid or social schemes, whatever way you want to call it, because till now in the last 3 to 4 years it was entirely capex and infrastructure heavy. While we believe that will still continue to grow, but anyway, given the high base, that growth was expected to slow down, and now given this pushes and pulls of a coalition politics and, government probably would like to revive, sort of demand at the bottom of the pyramid. So there would be some reallocation of resources in our view. With that context, anyway, now even before the elections, we had increased our weightage on consumer staples after being underweight for 4 years. Again, combination of two things. The pendulum had swing in terms of valuation on the other extreme, where the investment and capex heavy sectors had, very unfavorable risk reward, and whereas some of the more, the staples or the bottom of the pyramid facing stocks had a better risk reward. So irrespective of election outcome, I think the probability of making money was higher on the other side. And now this event acts as a trigger. So I think investors should definitely reallocate a part of their portfolio away from capex and industrials into consumer staples, maybe some of the large cap IT where valuations are fine. And actually, after 4 years, first time, it's that we are not seeing value across any of the sector. So till now, we were running a portfolio where we had a value and economy facing sectors bias in our model portfolio. But now we believe, we are not seeing any very attractively placed sector. Consumer staples on a relative basis is fine, but on absolute basis, I would not say again that it offers value. So I think it will become more nuanced, more stock specific. Sectoral calls will matter less, and overall returns will be muted, irrespective of the election outcome, because the earning growth for FY25 is expected to be in single digit for our coverage universe. So there is a slowdown in earning growth, not because economy is slowing down, but because the earnings had normalized in FY24, and FY24 was a bumper year of earnings, and on that base you will see a muted growth. So I think if one is comfortable with slightly more moderate return expectations on their portfolio, it should be a good year of it.
All right. Hi, Varun. Good morning and good to see you. And just to clarify, from your coverage universe, the earnings growth you're working with is high single digit, right?
Yeah. So
and on the Nifty, it is low double digit.
For entire coverage universe of 226 stocks, it's around 6% because it is getting pulled down by select OMCs and all. But at a Nifty level, it would be close to 9 to 10% if I have to look at our stocks which are part of Nifty.
Okay, all right. Varun, I wanted your take on the PSU theme. If there has been one flag bearer, it has to be the PSU stocks. The entire basket was available, I think, for 15 lakh crore of market capitalization. Just before the election verdict, it went to around 75 lakh crore, 76 lakh crore, if I got that number correct. How do you approach this theme? Because some of them have priced in some of that good news. But your approach, are there still pockets that you would like to get in? Or for the time being, you'd like to avoid that pocket because the big money has already been made?
I think there is nothing too attractive left in PSU. At the same time, what we have been saying, and we have been holding some of them for last 4 years. We had GAIL, we had SBI, we had Pargrade, NTPC, Coal India, quite a few of them in our model portfolio. Even, the OMCs and ONGC at some point of time in last 4 years. But now, I think relative attractiveness of some of them has gone away. So I would not say that some of these names, I think, are still reasonably priced, and that's why we have not exited all of them. We still continue to like SBI, we still continue to like, NTPC and Pargrid. But, the weights have been reducing because now there is no extra value being provided by these. If SBI is at 1.5 time price to book and other private sector good quality banks are at 1.8, 1.9, then there is no big sort of a value left adjusting for the ROA. So they is still reasonably priced. I would not say that all PSUs are overpriced and one should completely exit. But some of the pure momentum ones which are not backed by earnings and where there is too much euphoria and retail action, those should definitely be avoided. I think the kind of PSU rally we had 12-18 months, we believe that will probably come to an end. It would again become more nuanced, more stock specific rather than a broad PSU theme.
Okay, all right. What about this fear that, the balance between capex as well as populism? How do you expect, the newly formed government to navigate between that? Because some on the street believe that maybe capex takes a bit of a backseat and there'll be some populist measures. The other part says that, well, even the allies are growth oriented. So that's unlikely to happen. How you view this?
So I think there are 2-3 things. One, being populist doesn't mean that you are not growth oriented. So I think the way we see the budget to be presented, one, there won't be a complete 180-degree shift away from infra to just giving money in hands of the bottom of the pyramid. I don't think the government would do that. They would still continue to increase spends on infrastructure and capex, but at the same time, they will reallocate some higher allocation towards social schemes compared to what we have done in the last few years. Plus, they might come up with some new flagship schemes to revive, bottom of the pyramid from a 3 to 5 year perspective. So I don't think anything knee-jerk and short-term will be done by the government just to kind of spur immediate demand at the bottom of the pyramid. The good part is the fiscal position is strong. The tax buoyancy is good. And in that context, I think another view which we have is where the fear is that probably government may not follow the fiscal glide path. We have written very clearly in our note. We expect that government will not deviate away from the fiscal glide path, which means overall they will remain fiscally prudent. And the good thing is they have some headroom given good tax buoyancy to reallocate say 1 to 2 lakh crore from extra money which they would have probably spent on capex before this election, now probably to reallocate to more social schemes and bottom of the pyramid. But again, it may be more structural with a 3 to 5 year view. There might be some new schemes coming up, which is something to be looked out for.
Okay, Varun, let's see. I think the next couple of days will be very interesting because we'll have more clarity on some of these aspects as we get closer to the budget. But thank you very much for joining in. Really appreciate you being with us on the show today. Okay, quick check back on the market. Mid-caps are zooming ahead, 2.2% up on the mid-cap index. The advance decline ratio is extremely buoyant, over 2,000 stocks advancing. And the PSU boys, they're putting on some more weight and momentum. Look at BHEL, now 15% move on a BHEL, Hoodco 9%, Aircon. I mean, these stocks opened with a pop of 4, 5, 6%. Now they're heading towards the high single digits or double digits in some cases. Aircon is up about 9% as we speak. NBCC, RVNL, REC, PFC. So it's a long list. And this seems to be the momentum trade, at least of the day, at least of the morning, if not the day. I guess these days you just don't know, right? Better not say a day, just say the next couple of hours.
I mean, yeah, absolutely. For now, right? But moving on, Titan aims to break even for all the businesses by 5/27. That was the word which came in from C.K. Venkatraman, Managing Director of the company, during a candid chat with my colleague Mangalam Malu. The company is targeting over a 20% CAGR growth in the eyewear business in the next few years. Listen in to a slice of that conversation here.
We got into multiple categories over time, and in almost every situation we chose categories which are underserved, underpenetrated, unorganized, and that's been a strong formula for the company, virtually right through. And so eye care came in, 2005-06 time. Then 2013 we got into perfumes. 2017 we got into Tanera and the Indian ethnic wear, and more recently into bags. So all these categories are, defined by those dimensions that I said, and in each one we see tremendous opportunity for organizing, for serving customers better.
Ajay, I'd like your thoughts first on the competitive intensity in the jewelry space. What would you do to turbocharge growth in the jewelry business going forward?
I think competitive intensity in jewelry has always been high because it's an unorganized market and large number of players. It's also a huge category, right? It's about 500 to 550,000 crores. And obviously it's going to attract more and more players. But for us, we are still, high single digit growth market share. We are only at about 8% market share. So the headroom is huge, both in terms of share gain, as well as if I look at the dispersion of segments, be it markets, as well as maybe different segments, be it high value studded, be it wedding, regional markets. So the opportunity for us is huge, including the small town opportunity. Middle India is a huge base in India. There are 500 towns in the 1 lakh to 1 million population strata. And we are present in only about 180 of those. While we don't know if all 500 towns will ever get ready, but the headroom again offers a very large opportunity for us. So all in all, I would say the share gain opportunity is so huge that even if 5, 6 more big players or competitors come in, there's opportunity for everyone.
So to that extent, say over the next couple of years, what would your store rollout plan be, and what's your aspiration here?
Over the next 3 years, we see, easily we can add about 100 plus stores in Tanishq. We can add about 150 to 200 stores in Mia, and certainly 100 plus to 150 stores in Carrot Lane. Zoya also there's an opportunity, but there we are not looking at large number of stores. So in totality, the opportunity to add 300-400 stores is very comfortable.
One of the concerns that the analysts had, was the ability for the company to grow its margins from current levels. In fact, 12 to 13% was the guidance, saying that over the next couple of years, it may be at the lower end of that space itself. So should one believe that these issues right now are structural, or are there levers to improve them further from here?
I think at an overall domestic jewelry business, we shared that EBIT margins would be anchored around the 12% mark. And while there will be ups and downs quarter to quarter, but on an annualized basis, that's where we hope to. I don't know about growing the margins. Yes, with a certain operating leverage, it can grow. But in the medium term, we expect it to be around the 12% mark.
The variables, the way they are growing extremely fast, now at around 13% of the portfolio, what is the delta at which it is likely to continue to grow? That's one part. And the other part is the luxury watches that you all spoke about. Give us a sense of the scalability there.
So for the watches and wearables division, these two are the big growth levers. The premium watch business is something that we have gotten into with great gusto only over the last year or so. And we have brand play with brands like Titan Edge, Nebula, and Xylus. And these brands are doing exceptionally well, given the overall premiumization wave in the country. So that vertical will do very well. It's both because of the opportunity and the tailwinds, and also because of the exceptional work that the team has done in terms of design, horology, including materials, our own movements, finish, as well as the retail side, really improving the customer experience for buying premium watches. On the smartwatches side, after explosive growth for 3 years, we see a certain cooling off. Also, a lot of price wars are going on. So at this point, we are very focused on our own portfolio. We have fast-track smartwatches, which are really between, say, 1,200 to about 5,000 rupees, and Titan smartwatches, which are above 5,000 rupees.
And what would good growth in terms of numbers be, according to you?
That's hard to say right now. Like I said, after 3 years of growth, IDC is actually predicting 0 or even negative growth. So at this point, we are looking at a good double-digit growth, but it's a pretty volatile situation, and we would wait and see how that pans out.
For the overall portfolio, what would your projection be, say mid-market and the luxury end, which is doing a lot better? So if one has to, look at your watches and wearables portfolio, segment it, and say these are the ones which will be growing faster, these are the ones which will be growing at average, what would that be?
So premium would grow very fast on a much smaller base. The mainline analog, which is a large base, would grow around 15%. The overall portfolio is likely to grow between 15 to 20%.
And how much is premium as a percentage of your overall watches and wearables portfolio?
Right now it's small. It's much smaller.
5% or a little less than that?
Premium is right now about 6-7% of the overall analog business.
Is there a way you can get your products faster to the consumer than what it currently is, and what's the kind of approach here?
One, of course, is our retail footprint would expand, and probably expand quite rapidly.
What's the number there?
So FY27, I would expect not less than 1,200 from 900 today. But we do believe we can solve for the single vision customers' requirement online, and more people, once they experience us, they would have total confidence to order online. This is going to happen, and the partners like Amazon, Flipkart are also quite likely. They don't play prescription eyewear. They would probably work with us to make sure that the reach is way bigger than what we could reach as a mono brand. The speed, access would probably come together.
Are you considering QCOM for sunglasses?
In fact, we are just starting.
Next 3 year CAGR on the revenue and margin aspiration?
20% plus CAGR and about 12% EBIT margin.
How about you?
Again, 15 to 20% CAGR, 12 to 14% EBIT margin.
It's 15 to 20% CAGR on revenue and anchoring the EBIT around the 12% mark.
For all the other businesses, they'll have to ask you.
The sum of all this.
At what point do they turn profitable? And
looking at all other businesses, reaching a break even, together reaching a break even by FY27.
Okay, well, that's the punch. Right at the end, there's an interesting conversation with the top team at Titan, which was conducted by my colleague, Mangalam Malu. We'll take a quick commercial break here. The market's up 132 points. Mitesh is with us, I'm being told right now. Mitesh, good morning again. Thanks for joining in. We're up 140 now on the Nifty. So on the index, is there a trade? And in terms of specific stocks, what are you watching and what would you like to do?
Prashant, not taking a trade on the index, because as I said, it's been very volatile and I'm still waiting it to settle down a bit so that we get a clear picture of the trend. But yes, the good thing today is that the volatility indicator is subsiding. So I think in a day or two, we should be better placed to take indexes on the trading side. Currently, I have a buy on HUL. Now, we've been talking about positiveness on the FMCG sector, and today HUL is down. It's given a pullback and it's hit the important gap support area. So I think keep a stop loss just below today's low of 2518. So I would recommend 2515 and look for targets of around 2650 here. The other space which has come into focus is the IT space, where I think a lot of stocks are trying to reverse from oversold levels, and HCL Tech is one of them. So that's a buy with a stop below 1360 for a target of 1400 to begin with. So eventually we might look at higher levels.
Okay, all right, Mitesh. Thanks for that. Those are specific sort of trades as well from Mitesh. We'll take a break. We are back. Commodities back in focus with Manisha when we return. Stay with us.
Welcome back. So the equity market's managing to hold on to some green this morning. Let's find out what's the latest in commodities. We have Manisha with us in the studios now. Manisha, morning once again. So what's looking interesting to you?
Well, gold, and you're talking about jewelry right now. I want to talk about the gold prices, which overnight have gained up by $50 an ounce. So it has been a huge run-up that we've seen in gold. Yesterday, same time, we were trading around $23.20 an ounce. We're trading at $23.70 at this point in time. Well, it has to do with the decline in bond yields on weak U.S. private payrolls data that has led to buying come back in case of gold prices there. So it has been almost 1.5% of gains that we've seen in the gold prices for the Indian markets as well as trade opens today. Well, apart from that, the CME Fed Watch tool suggests that there is now a 67% chance of a Fed rate cut in the month of September. Well, this is something that the markets have been betting on for a very long time, that the third quarter of this year is when you will perhaps see the first rate cut come in from the US Fed. Well, this comes in on the back of the rate cut that we already have seen come in from Bank of Canada by 25 basis points to 4.75%. But this is the first time that you've seen a rate cut come in for 4 years. This is much on expected lines, so the industry was anticipating it. There's an anticipation that another rate cut from Bank of Canada could actually come in the month of July as well. But apart from Bank of Canada, it is the European Central Bank meeting that the markets are watching out for today. A 25 basis point rate cut is something that the street has already factored in coming in from ECB as well. And then when you look at the third quarter, it's not just the US Fed, but there are expectations that Bank of England and Bank of China could also be lowering rates by at that time. Well, the global central bank have been buying gold quite strongly. The month of March wasn't so great, but for the month of April, 33 tons net has been purchased by the global central banks. Well, within this, it's about Singapore, Kazakhstan, Russia, even India, which have bought gold in the global markets there. Well, the markets also are looking at reforms coming in from the Indian sector. Remember, we are the second largest buyers of gold. So the new government, what is their approach towards gold and whether or not there are any reforms coming in is something that the global markets are also looking out for. Well, that's about gold, but take a look at silver, and we saw strong gains onto this one as well. A percentage and more of gains in the overnight market. We did see prices decline below 30, but we are trading back above 30 at this point in time. Clearly off the 11-year highs of $32 that we saw in the last week of May there. Well, here as well, the street is watching out for the deficit in the global markets, strong industrial demand, and the fact that the US has imposed 50% tariff on Chinese solar cells, where silver clearly is a major ingredient there. So that's a story that the street will watch out for. If you look at the prices then on what the gold and silver have done on a week-on-week and a month-on-month basis, well, gold has turned positive for the week, silver hasn't. But when you look at a month-on-month prices here, silver continues to outperform. And on an year-on-year basis as well, silver continues to outperform. So good going when it comes to silver versus gold there.
All right, Manisha, thanks very much for that. So that's commodities and the lowdown there. Well, let's talk about PSUs, right? BHEL is one of the top volume-led gainers. NBCC, there is news flow with an order. Vivek is here with details. Vivek, morning.
Well, good morning. Like we mentioned earlier today, BHEL continues to see its robust order book grow quite significantly. So last evening, they've informed the exchanges that they've received 2 sets of orders from 2 separate subsidiaries of Adani Power. Number 1 is an order that they've received in the state of Uttar Pradesh. Now, this is for a supply of equipment to Mirzapur Thermal Energy. This is for a 2 into 800 megawatt thermal power project. Now, the company will be supplying both boilers, turbines, generators, as well as associated ancillaries. The size of this particular order is over 3,500 crore. Similarly, in the state of Chhattisgarh, now this particular equipment supply will be again 2 into 800 megawatt power project at Raipur. Size of the order is similar, over 3,500 crore. So today, BHEL has declared orders worth over 7,000 crores. Now remember, at the end of Q4 and at the end of FY24, they had an outstanding order book in excess of 1.31 lakh crore. So the order book there stands very, very strong. Now talking about NBCC, the company reported to the exchanges last evening that they had received multiple work orders in the normal course of business worth over 490 crore. On the back of the order chair, you're seeing the stock move higher today.
Okay, got it. Thank you very much for getting us the latest on those stocks and why they are buzzing today. Let's also look at, thanks for that, Vivek. Let's also look at Century Textiles, and that's a stock that's been up around 10%. And this is back on the back of some real estate development that they're looking at. Sonal has more details here. Sonal?
Well, Century Textiles wholly owned subsidiary, that is Birla Estates, has entered into a joint venture which is with Barmalt India Private Limited. They will be developing around 13.27 acre of land parcel for a luxury residential group housing in Gurugram under this particular joint venture. The development potential is approximately 2.4 million square feet, and it will offer them a revenue potential of up to 5,000 crore rupees. And remember, NCR is a region where a lot of new developers are entering. They're not new here, but of course they're expanding their footprint in the NCR region as well. Remember, the stock is up 67% in last 6 months itself, and adding on to some gains. So Street likes the expansion plans that they have in the NCR region.
Okay, all right. Century Textiles there. Real estate play. I mean, it's been seen as a real estate play, but I think now that there is front and center, the real estate part of the business. 2061 on that one. At this stage. We'll take a quick commercial break here. We'll come back and our special segment, it's the economy. My colleague Lata will be chatting with Abhishek Upadhyay of ICICI Securities and Suyash Chaudhary, head of fixed income at Bandhan Mutual Fund for a bond market perspective. Stay with us.